A heavy sell-off in stocks adding to pressure across the commodity board, with soybeans trading more than 30 cents lower. Michelle Rook has more on what happened and where markets will start today.
Joining us with market analysis, Mike Zuzolo with Global Commodity Analytics. A tough down day on Monday, everything down but hogs, but certainly a risk-off mentality in these markets, wasn't it?
Yeah, it really was, Michelle. And I think part of this goes back to a risk-off mentality, in part because China, and they're the demand bull. They've been the demand bull the last 10 or 15 years. And I think that demand bull is really more of a question mark, probably as much as it's been any time that I can remember in the recent history. And this goes back to those COVID policies, those zero COVID policies that reportedly Shanghai has reinstituted. And I think this is where the outside markets, the sharply higher dollar, the dollar that's going up in the spot index upwards of the highest levels since 2007, 2002, depending on which chart you're looking at, the 2-year bond yields, which are rallying to almost 3.25 plus percentage points. In the Federal Reserve meeting coming up this week, these things matter a lot more, I think, because the question mark about China's demand is so much in the mind of traders right now.
Yeah, that Fed meeting Wednesday, Thursday, what are we expecting in terms of the rate hike that we're going to have the Fed come out with, Mike?
Excellent question, because it changes almost by the hour. The consumer price index really laid the groundwork on Friday for the trade wondering whether we wouldn't get a full percentage point increase on this Wednesday's meeting, and that would be truly historic. I don't think it's going to be at that point. I think a 0.5 point to 3/4 is the top end, but I think then the trade is probably going to look at producer prices and say, does the Fed have to get aggressive again in July? And I think this is where the train continues to run with that stronger dollar and the weaker emerging market currencies. The Japanese yen's down to its lowest level, I think, since 1998, if I remember right, Michelle. And even commodity currencies like the Australian dollar is getting hit really hard by the U.S. greenback. So these are the types of things that have really caught the attention of the market almost solely and completely. And even the weather market that we talked about Friday afternoon seemed to take a back seat, if you ask me, on Monday.
Yeah, so let's talk about weather, because obviously Monday there was some belief that we were going to have favorable crop conditions in the report, but do you think that that is going to be the sentiment with this high pressure ridge that's building in?
Yeah, good question, because it's a market, I think, where we saw Monday the bear spreads working. They were a little bit more respectful of the new crop corn, the new crop beans. So I do think they're trading a little bit of weather by the spreads, but with this humidity and these daily showers coming in, popcorn type showers, and no real hot dry ridge forming yet on either of the models from what I can tell, I don't think the trade's ready to buy into a 2012 type scenario yet. Now, if that is something that would change in the course of this week, maybe by Friday or early next week, I think as you get closer to the July 4th holiday, that's maybe where you start thinking more about the La Nina bull stepping back in and the weather bull coming back in to try and take a shot at the long side.
Thanks so much, Mike Zuzolo with Global Commodity Analytics. Our full analysis on agweb.com. More Ag Day coming up.